Good morning, good evening, or good afternoon, wherever you are watching this. This is Mornings with Michael for information and educational purposes only. This is our weekend update, and we're going to start with our PowerPoint. Our word of the day is opportunance, an accessory or other item associated with a particular activity or style of living. I keep a bag packed with my workout opportunities so I can go to the gym anytime. And there we have it. So let's look at the AAII. The red line is the bulls, and the green line is the bears. So you can see the bears picked up last week, and the bulls really dropped down into bearish territory. Normally, when that happens, that's good for market bouncing back. We'll just have to wait and see till next week. Here is Biden's budget for 2025. He wants to raise the capital gains tax from here all the way to here, to the largest number that it's ever been, 44%. Now, capital formation is a way to get new companies come on board, and there could be a whole lot of selling if he gets reelected in December. That's all I'm saying. So let's take a look at the monthly chart. The Dow Jones Industrial Average. We got a bearish engulfing that is engulfing almost March and February numbers here. So rising volume on that. And we got a downtrend on the stochastics and a downtrend on the commodity channel index. So those look negative for May. So we'll just have to wait and kind of keep that in mind. So what do we have for the diamonds next week? So it looks like they're going to bounce up to 384.23, and then there's going to be a pullback to 379.61. So the buying has dropped off a little bit here. Got a little hook in the stochastics, got a little divergence, and still going up on the commodity channel index. We go to the small capital index. Looks like we almost got a gap up here. It's trending up on the stochastics, although volume has receded a little bit, and it's still going up on the CCI. So we got one positive for the bullish, one bearish, bullish, and bullish. So on IWM, I think it's going to run up to 199.75 and then pull back to 195.59 later in the week. So Monday and Tuesday probably could continue that trend upward and then pull back later in the week. The NASDAQ, QQQ, two-part forecast. Got a gap up here. So there's potential for this gap to fill. It's running its head up against the 20-day moving average. When the market is above this line, acts as support, and when it's below it, it acts as resistance and often gets turned away from this line. So I think it's going to go to 434.69 and then pull back to 425.73. And then we move on to the S&P 500. Same thing is going on with the S&P 500. You can see this was support before, and now it's resistance, this little red line here. And it's a possibility it also could get turned away at the declining moving average here. So on the S&P 500, I think it could go up to 512.67 and then pull back to 501.22. So that is information there. And then looking back in history, this is a 3-year chart. What happened in the past? You got a bearish Harami right here. The market pulled back. We got one wave down, 2 waves down to here, and 3 waves down before it started moving back up again. So this is kind of the line in the sand. Got some negative information coming further in the PowerPoint, and we can see this is trending down here and it's trending down here on the 3-year weekly chart. So this is the possibility of where it could go. And we really feel like the 2020 lows is where this market could eventually go with all the spending that is going on in Washington. Everything is just ticking away. But let's move on to the VIX. The VIX, we think is going to pull back. We do have a gap down here, but don't think it's going to pull back that far. So I think it's going to pull back to 1467 and then really take off up to 1838. So you can see both the stochastics and the CCI, Commodity Channel Index, are pointing down. So that's why we think there's going to be a little bit of a retreat. Now, let's just take a look at Bollinger Bands. There's kind of like rubber bands. This is Meta on its earnings. This is a lower Bollinger Band, and Meta crashed right through that. So these Bollinger Bands kind of pulled it back up closer to a true moving average. Interesting how that happens. There was a lot of green after it really sold off, really moved back up here, bullish Harami, and then got a little bit more move the following day, not as much volume. You can see got a little bit of a hook here, so we're not sure if it's going to be got a divergence in opinions. Stochastics is moving slightly down, and the commodity channel index is heading up. And we'll take a look at another chart here, reference to Bollinger Bands. Now on the upside, it hit this Bollinger Band. This is silver, and then pulled back. There's a gap here, and then there's a gap. Looks like there's 2 gaps down here. I think the potential it could pull back here, and this would be a good place to add silver. So like we've said before, if it gets up to these highs, take about 15% off or 10% off, and then on any pullback down to this area, you could add 15% back. And it's just rinse and repeat, keep doing that over and over again. So let's keep moving on. This is silver. We can see a bearish Harami here on the 1 year, on the daily. Huge volume on that bearish Harami. And right here, it's pulling back under the moving averages. So it's a big potential that it could continue pulling back on this, even though the volume was lower than on this green bullish Harami. So what news do we have out there? Well, investors pulled 143 billion from the fund market, making the largest weekly exodus since September 2009. This may have been on my agenda last week on the weekend update, as it was April 19th, but keep this in mind, that if they have pulled this amount out previously, they may not be done with the selling. And Peter Schiff urges Americans to get ready for a major dollar decline, predicts the end of the greenback as a global reserve currency. We've repeated this on the show a number of times, based on the number of outside countries that are buying gold to back up their currencies. Look at this. Global military spending hits all-time high of $2.4 trillion. Now, this is not a good sign. We do not want to be bombing each other. It's just not a way to move forward. But that is a huge amount of money being spent. And with this new bill that was just signed, it is not helping out Americans. I think we should try to fix our problems at home before we try to fix everybody's problems overseas. More bad news from the Fed. Its favorite inflation gauge increased more than expected in March. PCE, Personal Consumption Expenditure Price Index, surged last month, putting the rate cut hopes of entrepreneurs on ice. You like zero reduction in interest rates? Well, that may be what may be down the pipeline, down the pipe. The core personal consumption expenditure price index, Federal Reserve's favorite price inflation gauge, held steady last month, and that's still too hot for comfort. Came in at 3.7% when people were expecting 3.4%. And now let's look at this. Like I was saying, the House has approved $95 billion in foreign aid for Ukraine, Israel, and other U.S. allies in a rare weekend session. Both parties banded together after months of hard resistance over renewed American support for repelling Russia's invasion. And you can go to this usdebtclock.net, I believe it is, or usdebtclock.org, and we can just see tax revenue is up, but spending is outpacing that tax revenue by a greater amount. Just look, we've got 6 trillion, almost 7 trillion in spending compared to 4.8 in tax revenue. That is just not a good sign. And according to CNBC, the estimated cost of building a wall at the southern border would be 15 billion at most, with a range of 12 to 15 billion, and yet we're sending $95 billion out of the country. And this is how much do illegal immigrants cost the United States? Well, cost 150.7 billion spent on illegal immigration last year is more than the total gross domestic product of Mississippi, New Mexico, Idaho, and is more than the GDP of Wyoming and Vermont combined at 50.74 billion and 43.38 billion respectively. It just doesn't make any sense whatsoever. So that's the end of our PowerPoint. Let us go to the charts and kind of see what happened last week. First, I'm going to try to bring up what Bitcoin is doing today. Let me see if I can bring that up. Let me just double check. Here we go. So this is what Ethereum is currently doing as we make this recording. I believe it was down a little lower, maybe 3190 area, but it's come up quite a bit. Then we can take a look at Bitcoin. It was at right around 62,900, I believe, when I first saw it this morning. It has come up quite a bit. It hit a high of 64,267, and that is the story with that. Let us go to our chart. First, I was just taking a look at the Dow Jones. This is take the bottom of here. This was support, and now it's turned into resistance. And we think it's going to kind of bounce in between these two levels. So this is a dollar. Dollar is moving up. And so, Mr. Schiff, we're going to have to wait a little bit to see if your prediction that the dollar is going to fall down or collapse. So here is silver. Here's the one gap. Here's the other gap out under here. And here's where we think it could possibly fall to. Fill this other gap. Gold is moving up. Has a gap right here. So we'll see if it can fill that gap or if it gets pressure from after it's fallen below the 10-day moving average, and if it gets turned away there. Arrow, big move up. I believe there was one of the gold miners got a buyout, unsolicited buyout offer. We'll take a look at tech. We haven't looked at tech for a long time. Also another big mining company out of Canada breaking out. Let's see if I can find that. Yes, I believe it was Anglo-American ADR got a buyout offer over here. Huge two gap ups in a row that were just massive. Went up another 3%. Copper just keeps moving up and up and up. FCX moving above that 10-day moving average. I think Southern Copper has been the leader. It is doing about the same, up 4.5%. Vale up nearly 2%. Rio, I think it gapped up and then closed near its low. And finally, BHP. I'm not sure what's going on there, but big gap down. So I'm not sure what's happening in Australia to affect that. Take a look at our bond yields. Got a slight pullback, but it bounced off the 10-day moving average and at 4.69, and the 20-year yield pulling back to its 10-day moving average as well. This looks like try to break out once, twice, thrice, and then just keeps on rising. So we looked at all the moving averages. Let's take a look at some stocks that looked interesting. Here's the ETF over in Europe. It's trying to get into this breakout area that's kind of interesting. VRT, which we put on a call option right here on this low, and it's kind of working out, looking pretty good. In the AI area, SMCI has its earnings next week. That's going to be big for the market. Apple. NVDA made a pretty strong move. Looks like it's trying to break out here. It's definitely breaking pretty heavily above the 50-day moving average. We'll see if it can hold that next week or if it gets turned back. Pretty good volume here. Saw a note that a number of congressmen moved away from NVIDIA and they're buying into AMD. I think they have their earnings coming up next week as well. There is some other interesting companies. Natera got above its 10-day moving average, pulled back to the 50, and now it's gone across 3 moving averages here. We haven't looked at CrowdStrike for a while, but it pulled back under 300. Now it's back above 300. We'll just have to wait and see if it can get above the 20-day moving average. This had a big, really strong move last week. Astera Labs, we have a few options on this. And if it keeps going, we'll just convert those into the stock, much like what we do with VRT. Really strong move here. Looks like breakout, IPO base breakout. There's one that we had. We've got a strong move, big bounce off of the 10 and 20-day moving average app. We're going to look at whether we get back into this on Monday or not. CAVA, we've talked about this for a long time when it started versus IPO base last year. And then when it took off from 31 all the way up here, we took some of our profits, put on $49, $49 options, converted those. We sold some 500 of the shares that were converted right around 60. So we still have 1,000 shares. Had a pretty strong move after the earnings in Chipotle. And CAVA doesn't have their earnings for another 32 days, it looks like. This is Broadcom. Had a double bottom. When it was selling off, we had low volume over here. We had some pretty good volume on Thursday, a little less volume on Friday, but we'll see if that can move out of that area. KLAC 10 core had a pretty good move. 2 days in a row, really strong volume. Their earnings came in at -4%, but we'll see if that can get it up to the buy area here. And I'm going to just check on one thing here. Yeah, I thought we had a little bit of a typo in Brazil. This airline manufacturer had a gap up on Friday, had a strong move. We just got a lot of blue bars here. So we got 1, 2, 3, 4, 5, 6 up in a row. Looks pretty interesting. And now we have a few on the bearish side. So this kind of resembles like a head and shoulders top. There's a left shoulder, here's the head, and it looks like it's forming the right shoulder. And take a look at this on the weekly. Left shoulder, here's the head, and here's the forming of the right shoulder. Once again, you need to do your own due diligence to make sure if these things make sense for you. I think probably a put spread would be the better way to go than actually shorting. Castle Biosciences kind of looks like a double top. Tried to come up here, tried to come up to the breakout, and then just sold off on an earnings event. Came in at -10 cents. I think people were expecting more. Came up to the 50-day moving average, was turned away, came up again, was turned away again, and now it's trying to come up there again. And our final candidate, Bath and Body Works. So we see the left shoulder right here, the head, and the right shoulder. Will it get turned away at the 50-day again? That's a big question. Well, that's our report for our weekend update. It's been Mornings with Michael for information and educational purposes only. If you have any financial questions, feel free to reach out to us. And remember, keep going out there, working on your goals, writing down new activities that you can do to get those goals and just surprise everybody around you. In the meantime, hope everybody has a great weekend, and we'll catch you next week.